Very special guest today, James Anderson at ST Bullion. How are you doing today, James?
Doing well, Robert. Thanks for having me on.
Yeah, thanks for joining us. Appreciate it. I know you're out of country right now. If the internet connection stops, we'll definitely just get reconnected to continue the conversation. But I appreciate you joining the channel. A few things I wanted to talk to you about. I know you and I talked at Silverfest about a presentation that you gave on when to sell your silver. Maybe we can get started there. What are your thoughts on that for people who've been accumulating silver for a while and now they're wondering when is the right time to get out?
Well, I mean, it's a very long topic. It's something that we could probably talk for the entire day about. The first and foremost is that it's a personal decision. Some people, when they buy silver and gold, they basically think, I'm not going to sell this and I'm going to hand it off to my loved ones as I pass away, etc. So it depends on, I suppose, your perspective of what you think is going to happen in the future. And in the beginning of that presentation, I describe, basically the percentage chance of certain things happening. Like, for instance, people think we're hyperinflation bound, and a lot of people thought that in 2008, 9, 10, and that didn't come about. So maybe we are, maybe we aren't. The percentage chance I give that is just pretty low, but it's still a possibility. But in the end, my position in precious metals is outsized at the moment. I have way too much in terms of versus other asset classes. And at some point I have to rebalance that. And the only time I'm going to start rebalancing that is once gold and silver start hitting fair value and start getting overvalued, in my opinion. And that's coming, I believe, in the coming, probably it's going to play out this decade, I would imagine, and into the next. So at that time, it's going to be time to start looking around and thinking about where else to allocate some of these profits and to move, to take some of that position back down to a threshold which would be more in line with what historic prudent precious metal allocations have been. I've done the research, I've done the work in terms of reading different people's research on it. And Jeffrey Christian has a really good study he did with from 1968 to now, for present day. I think the one I looked at was up to 2017. So it was almost a 50-year study on what is a prudent precious metals allocation in a full fiat currency era. And he came up with 20-25% gold bullion straight up for 50 years has been the best risk reward versus the S&P 500 and U.S. Treasuries and bond mixes. So, and he had like 500 different portfolio mixes, so it was everything from platinum, precious metals, every type, silver, gold, every type in mix. And he just came up with 25% gold was the best in the last 50 years. So I would imagine as this decade unfolds and as keeps going and gold and silver start going up in value, I will draw down to 20 to 10% of precious metal bullion, and the rest will be in other asset classes at that time. So again, this is a personal decision. Some people look at me and they say, why would I sell for fiat? And it's like, well, I don't know. The British pound's been around for a long time. It didn't go up in smoke. It's still around, and it originally started as I think 12 ounces of silver was a sterling pound, and now it's, I don't know, 1/15 of an ounce of silver. So it's lost a lot versus silver. So my guess is the U.S. dollar is going to do the same, something similar, and probably faster than it happened with even Britain. So that's basically the idea. And in order to, I actually will give you a link that people can go look at. It's on Google Docs. I did that presentation and posted it there with a whole bunch of notes and such. So probably do more justice for someone to go look at that. It was like a 20-minute condensed presentation. It's probably like a fifth of my outlook on when to sell, but at least you get a fraction of an idea of the complexity involved. And I'll give you that link after we talk, so you can put it in the upload on YouTube.
Yeah, thank you for that. And I agree with you. I don't think the dollar is going to go away. A lot of people think we're going to hyperinflate and crash. But I've been documenting on my channel recently how I think they're just going to go to crypto. The IMF's already got plans out for that. It seems like the Fed and a lot of the central banks are aligning to going to crypto. So yeah, we may have a dollar blow up, but they're going to go to a crypto version, and they'll probably still call it the dollar, and they'll just revalue it that way.
So maybe the wording, I wouldn't use the word crypto because people are going to jump on you there. I would use central bank digital currency, which is what they use. CBDC, which is it's a direct currency that the fiat central bank artists create and then give directly to the end user citizens. And they just totally jump and bifurcate the banking system, which usually makes the most of the currency. Usually, I mean, makes 80-90% of the currency in the supply of M0 to 3 and M0, 1, 2, 3. They're making the vast majority of the currency, but not in the future. I think central banks will be making most of that currency and just totally jumping the commercial and retail bank system.
Yeah, I agree with you. It is different than the Bitcoins and Ethereums of the world. It's not the private cryptocurrency. So thanks for correcting me there. I think they're using the same technology. They're going to use the blockchain and hashgraph and all these different versions of the cryptos, and they're going to implement them into the banking system. And I think they'll keep the national currencies. I think people kind of marry the money or like the money of their given country for patriotic reasons, or just because it's easier to trade in that currency. So I do think that they're going to stick with that. But yeah, I do think the age of central bank digital currencies is here, and I think that's what we're going to go to. And so at some point in time, like you said, you're going to have to come out of silver and gold to get in, to have liquid cash or digital currency to be able to trade for everyday purchases. Some people think we're going to a barter society. I don't know if we're going there unless you wanted to do black market barter or you wanted to do under the table or in that.
No, I certainly think that's a potential in the future. There was a movie that was pretty ultra violent, if people ever saw it. It's called Looper, I think, or something like that, with Bruce Willis and a couple of actors where they're running around and they're working basically for the mafia essentially in the future. It's a sci-fi movie. It's in the year 2070 or something, and the main protagonist is he's basically saying, people told me to go to China, like that was going to be the market that was going to grow the most in the next 50 years. And so this movie has a lot of things that are interesting in terms of their belief in the movie was that gold and silver are going underground, and they're going to be used, bullion is going to be used by the free market, essentially the black market, the market that doesn't play by the rules that the governments are claiming. And so, but in the movie too, they were using physical yuan cash notes, which will be gone probably in about 10, 20 years. I mean, those things, China totally doesn't want to use physical cash. They don't want their citizens having any privacy or any autonomy.
That's right.
And the idea that even China could confiscate gold. I mean, this has happened before in history, so I would not be surprised to see them do something that advanced if they really, if they just mimic what the United States did. I mean, essentially, it's like, here's your yuan notes for your bullion, and give us the bullion or die. It's one of the two. Like, that's how China would play that. So, yeah, it's the future is really, it's coming at us faster than I think most people realize, and this central bank digital currency model that's coming, it's going to happen this decade, I think, and into the next. It's going to be very, very solid. It's going to be very, very fast, and it's going to shock a lot of people how quickly it comes on, how much it changes things. I think that this idea that the United States fiat Federal Reserve note is going to be the dominant reserve currency forever and ever is, I think it's sorely mistaken. I think it's going to change a lot in the coming decade.
Yeah. I agree with you. What are your thoughts on gold right now? I know that you invest a lot in silver. Do you invest in gold as well? What's your outlook on that, especially with the coming presidential election? It seems like all the change we're going through right now in today's society because of, the slowing down economy, COVID, all this stuff. There seems to be a lot of change. So what's your view on gold going forward?
So right now, I mean, what we had a run up to around just under 2,100, and we're in consolidation right now. And if you look at charts in general, like especially during the full fiat era, when gold goes beyond its old high, it usually has, a rise up just beyond its old high, and then it kind of squiggles and goes sideways for consolidation for a while. And that's where we are right now. At some point, I mean, it could go lower, it could go down to the high 1700s even, the 200-day moving average is right around there. So if we have some kind of crisis in the stock market or in the bond market again, it's possible that you could have a sell-off again, and you could see the spot price drop. But on the physical side, the bullion will continue to be purchased, and they'll continue probably to be a premium again on the futures market, trying to suck up physical into the Comex, like we saw in March and April. So that could come again. And I think ultimately we're going to blow past 2,100 probably by the end of this year, and probably start running up toward 2,500, maybe 3,000 at some point. If you have a situation, that'll probably happen after the election chaos kind of goes through, and we finally get into a situation where they're rolling out UBI and QE infinity. It just is obvious that's what they're going to be doing from here on in. So, and they're devaluing the currency, and that's as obvious as I think it can get if you look at the numbers and the data and the math. It's like the only way out of this is default or debase. It's or a combination of both, and I think that's what we're going to see is a combination of both. But on the government side, they're not going to default on the fiat currency promises they've made. They're just going to devalue the currency, and so that's, I think, the easy way out, and that's where we're going. And when it becomes obvious, and the bond market finally realizes, like, hey, long-term rates, they're not going up. They're pinning the long-term rates to an artificially low level. And we're going to be sitting here in certificates, what they used to call certificates of confiscation. That's going to come back, that entire idea. And so if you have the bond market start running into gold, it's going to set the spot price on fire. And you're going to have a gap up double, triple of the spot price in short order. And I think that's where we're going.
Yeah, a couple of really good things there. I want to talk about the Comex. You mentioned that there at the beginning of your response. A lot of gold seems to be flowing from London. That's not a normal pattern. Ronan Manley documented in 2019 how there's almost no gold flowing from London to the Comex. Now we have seemingly tons of it. I don't know if they're using the London market to stop Comex, but definitely seems to be, as the price is rising, they're trying to hold it down, and they're trying to filter a lot of gold through there. And people are taking off the Comex, or they're leaving it ineligible. They're not putting it back out for trades. So what's your thought on that? Do you think there's a rush on gold, or what could be behind this movement of gold from London through the Comex?
I think if you look at the United States, if you look at the high net worth class in the United States, I think those people are starting to freak out a little bit. The family offices, I mean, there are over 80,000 estates in the United States with estate values of over $50 million each. Okay. Think about that. You have 80,000 estates worth over 50 million, right? So there's a lot of those that are billionaires, et cetera. They're not going to move that fast into gold or silver because they know they could crash a system like a Hunt brother and get scapegoated essentially. But I do think that they're going slowly but surely, and that's what we're seeing. We're seeing family offices probably, that are taking delivery off the Comex and probably moving it into the ineligible pile, like you say. That I think is what's happening. You're having big money who's looking around and slowly creeping to the exit door, and the exit door is precious metals, bullion, or into mining shares. They're going to start doing that as well.
Yeah, I agree. And the mining shares haven't blown up yet. I'm just waiting for that to happen. I don't think the generalists just really come in yet. But man, when that blows up, I think the mining shares are going to go absolutely crazy.
If you look at the last bull market, like in the 70s, they really exploded after the peak. And I think that's what you're going to get to see again. You're going to see this situation where bullion may outperform the precious metal mining sector for a little bit as we go exponential. But once that exponential phase has kind of gone past this and beyond us, the mining share should outperform the hell out of bullion. So it's kind of like be in the bullion at first and then start speculating a little bit in the miners as time comes on.
Yeah, I want to turn attention back to silver. There was an announcement somewhere around October 9th, I believe, on Silver Doctors about increase in premiums for certain semi-numismatic, I would call them, products coming out of the US Mint. Brilliant Uncirculated, I think we're going up to $67, and that seemed to set fire to Twitter a little bit there. Some confusion about what may be going on in the silver market. Maybe you can kind of clarify, what is a Brilliant Uncirculated coin? What is a proof coin? What are the regular everyday coins that people buy, and what does it mean potentially for the price increases?
So the U.S. Mint has a mandate to operate at a profitable way. Don't take, to basically operate in a situation where they can pump out cupro nickel coinage that we use in circulation, like the pennies and the dimes and quarters, et cetera, who typically have a melt value much lower than their face value because they're made of such junk metal these days. They have to then offset the cost of producing those coinages and currency, the fiat Federal Reserve note that you see Steve Mnuchin and his wife playing around with. They have to come up with some other operation to make profits to cover for the cost of making all that stuff. And they use the bullion and the precious metal, the proofs and the numismatics that they sell on their retail website. It's probably one of the worst retail websites of all time. The U.S. Mint is, and let's be quite honest, I mean, they're just really, really inefficient, okay? And so that gives opportunity for dealers like us, bullion dealers, to fit the gap, the private market, the private businesses to come in and be the market makers in a lot of the products that they create. Now, the price increases were for the products that they sell directly off their U.S. Mint website. And the $67 price point for the uncirculated silvereagle coin is, it sounds ridiculous, right? To pay $67 for 1 ounce of silver when you can go to SD Bullion and buy it for, just high 20s, et cetera. But you get this cool box and this nicer, and the U.S. Mint gets to cover the cost of creating fiat Federal Reserve notes for Mnuchin and his wife. And so it's this weird situation where people get confused and they think like, oh, that means silver eagles are going to go up too. And I think the escalation is obviously they see the market's turned and it's gone bullish, and the fact that a year they probably typically don't change prices every more than once a year, so they're trying to get ahead of what's probably coming, which is next year. I mean, we could have a situation where silver spot 50 is getting threatened again, and once you blow past 50, I mean, look out, because it's going to start shooting up 70 very quickly. And so it's just this situation where I know it sounds ridiculous, $67 silver eagle coin. It sounds absolutely silly, but at some point that's going to sound like a fraud. Like if somebody's trying to sell you a silver eagle for $67, you're going to say it's probably some Chinese fake. It's basically someone out there who are using that to catfish people. At some point, we're probably going to a situation where silver eagles are going to be triple digits in price, and that's where I think this goes, and it happens probably faster than most people think is possible.
Yeah, and I want to clarify for the viewers out there, the Brilliant Uncirculated coins aren't really numismatic, although there's a numismatic premium. I argue they're not numismatic because they're not necessarily rare. They're printed in enough quantity that anybody really wants them, they're gonna mint the coin. And it's not particularly old. It doesn't have to do with American history. It's not pre-1933 gold, for example, like pre-1933 confiscated gold. It's not some rare coin that you couldn't get, by simply going to their website or going to other websites. So how is it that they're able to get away with charging that premium? And is that a good investment for people to get one of these Brilliant Uncirculated coins?
It's for collectors. I mean, basically people who who collect coins for a hobby or who want to give graduation gifts with a nice presentation with a box and a COA and stuff like that. That's who buys these things. I mean, and they buy them onesie twosie, so they're not hurt that bad. It's not like they're backing up the truck and loading, 500 of these things instead of buying a U.S. Silver Eagle Mint case at a more appropriate price. So people understand the U.S. Mint sells directly off their website these proof numismatic coins and even these uncirculated coins at these very high prices, $67 and up, for 1 ounce of silver, and they look pretty. Proofs are stamped and they were like mirror-like quality, and that's all pretty and such. But I'm not Gollum, and I don't like sit here and worship silver, like some nutball. I mean, I want the weight because it's money and it's always going to be something. I look at the other the competitors in the fiat currency world and even the cryptocurrency world. I'd much rather have silver or gold in physical form in my hand these days. I just think the asymmetric bet on that is it's too good right now. I mean, you cannot lose, cannot go to zero, and the upside of this thing is 5 to 10 bagger pretty easily in value terms. So to me, that's what I look at. And so people understand the U.S. Mint, they basically have it's similar to like the bond market. They have primary dealers. Only primary dealers can buy bonds directly, and so there's only primary dealers who can buy the bullion directly from the U.S. Mint. Silver Eagles, I think, are sold at a seigniorage fee currently at $2.50 an ounce over spot. So these primary dealers cannot get Silver Eagles brand new for anything less than $2.50 over spot. They turn around and sell it to dealers like ourselves at SD Bullion, retailers, etc. And with a slight markup, they're making, right now they're making large markups. So don't get me wrong. When the primary dealers get in a situation where there's a shortage and there's outsized demand, they get real sharp elbows and they start making $1 at least on every coin they sell. And that's why you see these premiums and these prices start gapping out, because primary dealers in the retail market too, they start taking larger profit margins too. And that's a lot of the complaining that goes on, is the fact that people are sitting there and they're like, well, spot fell down, but I can't get bullion any cheaper than what it was before, because I mean the profit margins are just blown out. And so I understand that complaint. People, they can go hide in derivatives for a while and wait for the premiums to come down, but I just think $2.50 an ounce over spot for Silver Eagles is the current seigniorage fee that the U.S. Mint's charging. You can bet that next year it's going to $3 over an ounce over spot, because they've already jacked up the prices on their website. I mean, it's just a matter of them turning to the primary dealers and saying, screw you, it's $3 over spot. We have a new design now. It's more expensive with this anti-counterfeit feature, et cetera. I believe the American Gold Eagles is roughly 3% over spot, whereas they so think about it from the gold side, they have a percentage. So as the spot climbs, it kind of keeps in balance with that. Whereas in the silver side, it's a firm $2.50 an ounce over spot. It doesn't keep with the spot price of silver raising. So they're going to turn around and arbitrarily jack that up every few years that come up. And so look, in the future, like that $67 an ounce spot price that's coming, I think, through silver, you're going to see a situation where it's $67, say, for spot price, but the Silver Eagles on a retail basis are selling in the mid-70s. I mean, that's, I think, where we're headed toward, is a situation where Silver Eagles are selling $8 to $10 an ounce over spot as we go higher and higher. So, I mean, just prepare your minds mentally for that, because that's what's coming.
Looking at based on your comments and looking at some of the things going on in the market, if we look at Comex, huge amounts of silver deliveries going on since February, March timeframe, just almost unstopping all year long. You have the Mint hiking prices on their numismatics. Of course, they tend to always run out of silver, but I mean, these are really big price hikes. Do you think that's a sign of some shortage, more demand than supply, or what do you think could be going on there? Do you think we're going to run into silver shortages this year or maybe next year?
I don't think it's going to happen this year, but I do think it's coming because at some point you're going to have the big players like India come back into the market and be bidding for silver. One year in I think 2015 or 2016, India came in and bought over 250 million ounces of physical silver in 1 year alone. That's well over a fourth of the entire New Line mine of silver by one country. I mean, they come in and bid up anything like 100 million, 200 million ounces next year. It's going to be a real pinch. And it's going to start showing the fact that either these Comex numbers are not true, the SLV is not backing what it's supposed to be backing. Some of these ETFs are lying about what they really have under their vaults. And that suspicion is not going to end. It's going to keep getting bigger, I think, as you start seeing outsized demand come in from, say, an India who's been pretty much not online buying gold or silver since the lockdown of their wedding seasons with the COVID. And now that they're reopened their wedding season, they're small weddings. You know, these are tiny ceremonies now. It's not like the big week-long festivals that they have, and they drape the the bride and groom with gold, and some of the poor country people on the outside, they use silver a lot too as a way to save for the long term and to kind of hedge for the future. And so that's coming. I think it's coming again. And the question is, will it be India or will it just be individual outsized Western demand that starts really buying up a lot of physical silver and gold because of fear of losing purchasing power because the currency is going wrong, or financial markets are looking even more shaky than they currently are. I think both of them are. Once they do, you're going to start seeing again another situation where shortage is going to occur, premiums going to jack out. You're going to see eventually premiums are going to go, I think, higher than they went in default 2008 before this thing totally crescendos. I mean, and that was, you thought the COVID premium situation was bad. The fall 2008 one was worse. I mean, it was so hard to source metal. There was days literally working in the industry where we didn't have anything to sell. Everything was back ordered. And so you could get in line and wait 6 weeks to get a box of silver eagles, but you had to pay through the eye to get that, and you had to wait a month and a half, hoping that the dealer would deliver on their word. I mean, it was a shaky, difficult situation, and that I think is coming again at some point.
Yeah, I think two additional things I want to point out. Back in 2008, 2009, we didn't have the above ground stockpiles of silver, or we had above ground stockpiles of silver, which we don't have now, if you believe data coming out from the Silver Institute and U.S. Geological Society. And then if you look at China, and they're wanting to increase their middle class income 50%, but to do that, they have to get into a technology society. I think China is going to be a huge draw on silver as well. So I think there are going to be some industrial reasons, investment and industrial reasons over the next 4 to 5 years, which cause silver really to blow out.
Yeah, and there's no telling what's going to be invented in terms of energy, creation in the future. I mean, silver is going to be needed for high tech things. I think you have about a handful, 4 or 5 billion, say, of 0.99 fine silver and junk silver sitting out there in ounces amongst investors. And I imagine a good swath of that is going to come back into gizmos and gadgets in the coming decades, but at a much higher bid price. Not at these pathetic, we don't even recycle silver because of the price, how ridiculously low it is right now. And at some point, it's going to get so high that it's going to bid out a lot of this silver back into industrial usage.
Yeah. Would you, a little bit on the gold silver trade, do you trade the ratio between those two? Do you move back and forth between gold and silver at all?
I don't use them for like short or medium term trades. I use them for a long term forecast. So for instance, in that when to sell forecast, I basically look at the 2011 low of 33 as being a target in the future. We're going below 33 GSR in my mind, GSR being the gold silver ratio. I mean, if you think 2011 was a silver mania, you have seen nothing yet. I mean, the next mania coming is going to be, it's going to be obnoxious. It's going to be one of these things where you're going to want to walk away and be like, I wasn't involved with that. You're going to have to throw your hands up because of the people who are going to come out of the woodwork and, start saying things that nobody should say about silver. They'll start coming out in the woodwork and talking about, gold and silver going to parity, et cetera, et cetera. I mean, that will reignite itself again, and it'll show up. People talking about single-digit GSR, the Egyptian 1-to-1 ratio. I mean, it's common. I just think that the 33 target is very easy. I think that's the fat to aim at. Once it blows beyond 33 and goes into the 20s and teens, maybe, that's the time you need to be looking out and start moving some of these profits into other asset classes that are by that time undervalued.
Yeah, it sounds crazy to talk about the teens, but that's the mining ratio right now. So if a lot of silver's been used and it's not sitting in all these vaults, and there's some, but most of it's been used up in industrial products. And we're
So
mining, what is it, 9 to 1 or 10 to 1?
yeah, it's a single digit. It comes out of the ground, a high 9, 8, something like that, 10 sometimes. But yeah, I mean, that's the way it comes out of the ground. Doesn't necessarily mean that that's what they should be worth toward one another. But if we have a situation where we're having a monetary crisis, or people's real worry about, every time they get a central bank digital currency UBI injection, they just go buy gold and silver. I mean, that's where this goes. I mean, basically you see people running back to the monetary metals, and the monetary metals for the majority of all human history have been in teens in terms of trading, and teens and even single digits. So I know it sounds nutball because the fiat central bank, they're in control, and they've been in control for quite a long time, for over a century. They've been really hammering and pressing down the price of silver and fixing the price of gold and trying to keep that tamped down. But at some point things get lopsided on the other side, and that's, I think, where we're headed. So that's the bet. I mean, the asymmetric bet is that we go into a lopsided situation on the other side.
Yeah. So, James, how can they find you at SD Bullion? What's the best way to contact you if they want more information on the metals?
Sure. So it's sdbullion.com. Obviously, I'm in the blog section under the resources tab. I post a weekly video that basically, more or less, my job there right now is curation of content. Basically, every week, stuff that goes on in the metals markets, I try and curate what's the most important to our listeners and try and condense it down to a 10 to 15 minute video that's free. You can find that on YouTube, SD Bullion channel, and you can follow me on Twitter at James Henry And.
All right, fantastic, James. Thanks for joining us. I appreciate it.
Yeah, Robert, it was a real pleasure talking to you.